Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video. Hi everyone, this is the fourth video of branch account chapter, and in this video we are going to solve this branch account problem which is based on invoice price. Okay, now before going ahead, let me tell you that in the previous video I have already explained the concept of invoice price, the calculations required to find out invoice price, and also the accounting treatment that you need to do when the problem is based on invoice price. Okay, so please watch that video first. Now let's go ahead and see this problem. BK Limited Bangalore invoiced goods to its Goa branch at cost plus 25%. Okay, so here we come to know that BK Limited Bangalore is the head office and Goa branch is the branch. Okay, and the head office is sending goods to its Goa branch at cost plus 25%. So this is what is meant by invoice price, sending goods at a higher price. If an item costs 100 rupees, then it is sending it at 125 rupees. So this is what is meant by the invoice price. It's simple, don't get confused. Invoice price is very easy. Just watch that previous video, you will get the complete idea, okay, in detail. So the invoice price, yeah, so here we come to know that the problem is based on invoice price because they are sending the goods not at cost but at cost plus 25%. That is invoice price. All right, the price of an item is inflated, it is increased. Okay, that is what is meant by invoice price. So here this is the loading percentage. All right, then they have said from the following particulars prepare the branch account, and here they have given the opening stocks 1/4/2017. So we come to know these are the opening stock and debtors amounts are here. Then we have got goods sent to branch at invoice price 40,000. Now these two things are very important. Okay, the most important things are the loading percentage and the goods sent to branch. Always we have to check whether they match. See, here the percentage is on cost. Cost plus 25% means 25% on cost. If, for example, let's say if the cost was 100, then the invoice price would have been 125. Okay, it would have been 125. Okay, if the cost was 100, but we don't have the cost, we have the invoice price. Goods sent to branch at invoice price, so they don't match. The percentage on cost and the amount is on invoice price, so they don't match. So what we need to do, I have told you in the previous video that we need to convert this percentage from cost to invoice price, so that easily we can calculate. Okay, we'll see that, don't worry. Then next we have returns to head office. See, returns to head office is always credited in the branch account. All right, it is opposite to goods sent to branch. See, when goods are sent to branch, the branch is receiving, right? But when the returns to head office is happening, that means the branch is sending those goods back. So head office is receiving. All right, so it is credited in the branch account. Next we have the expenses. So these are some expenses: rent, salaries, sundry expenses. So all these expenses are debited in the branch account. We know that the head office pays for those expenses, so they are debited because due to the nominal account. Then next we have credit sales 30,000, cash sales 18,700. See, cash sales we will take it in the credit side of branch account, but not the credit sales, because credit sales means the cash is actually not received, right? The customers, aka the debtors, have promised us to pay. All right, but we have received the cash from debtors. How much cash do we have received? We have received only net 28,500, so 500 is missing. Okay, no problem. So we will take only these two items. Okay, that is the cash sales and the cash receipt from debtors, because these are the actual cash that the branch received in hand. So only those we will take in the branch account. Next we have here discount allowed and bad debts and sales returns. So these three items will not come into the branch account. These three items will go to the debtors account, and we will adjust these items through the debtors account. Alright, next we have here stock on 31/3/2018. So 31/3/2018 is the closing date. So this is the closing stock, and this will be credited in the branch account at the last. Right, so here in this problem there are no liabilities, only two assets are given, stock and debtors, and the closing balance is not given. So that means we have to prepare the debtors account. So in the debtors account, what all things will come? The opening balance of debtors, discount allowed, bad debt, sales returns, all right, all those items will come. We'll see that. Okay, easy, right? This problem is very simple, just it's based on invoice price, so I have to explain you how to treat actually the invoice price. All right, so we'll solve the problem. Okay, now let's solve this problem. First we need to prepare the debtors account. All right, why are we preparing the debtors account? Because to find out the closing balance of debtors. It was not given in the question, so whenever the closing balance or the opening balance or the cash received from debtors, whenever these three items are not given in the question, we must prepare the debtors account to find out any of those three items. All right, that is the reason of preparing the debtors account. All right, then the debtors account is an asset account, so it will always have the debit opening balance. Okay, to balance B by D 5200. This was given in the question, opening balance 5200, so we debited that. Now how to insert all these items? See, the simple rule of preparing the debtors account is that whatever increases our debtors, we debit that, and whatever decreases our debtors, we credit that. All right, see, we debited to credit sales. Why? Because by selling goods on credit, it increases our debtors. All right, so we debited that. The credit sales was given in the question. All right, don't worry. Then we have got here by discount allowed, by bad debts, and by sales return. So we credit all these items because they reduce our debtors. See, by giving discount, they will pay less, so we credit that. Bad debts means that we have no hope of receiving any money from those debtors, so we credited that. Okay, because they reduces our debtors. And sales return, the debtors who return their goods back to us. All right, so that also reduced our debtors, so we credited that. And next we have got by cash received. See, the debtors paid off their debt, so they paid off their debt means there is no amount of money left which is going to come from the debtor, so it is getting reduced. All right, so when the debtors reduces, we credit all these items. After crediting all these items, we will balance the account. Okay, we will balance the account. We have to see which side is higher. Here in this problem, the debit side is higher. 30,000 plus 5,200 is equal to 35,200, right? And this side is shorter. So what we did is we wrote this total on both the sides and we subtracted all these items with this total. So then we got 5,200 as the balancing figure, which will be the closing balance of debtors account. This is how you find out the closing balance of debtors account. Easy, right? Okay. Now after preparing the debtors account and finding out the closing balance of debtors, we need to prepare the branch account. Okay, and this branch account is prepared to find out the profit or the loss made by the branch. And this account, the branch account, is a nominal account, so we record all the expenses on debit side and all the revenues on the credit side. Is that clear? So here's the question. See, before going to the question, the summarized question, let's see the main question here. What they have said is at cost plus 25%. I have told you, you have to pay attention first to these two things, that is the loading percentage and goods sent to branch. You have to see whether they match or not. If they match, then there are no conversion required. I've told you there is a conversion required, the conversion of percentage. Okay, the loading percentage. See here the percentage, the loading percentage is given on cost plus 25%. That means they have sent the goods at adding 25% of profit. Okay, that's what it practically means. Now here goods sent to branch at invoice price. Okay, it is given at invoice price, so it is 40,000. In this 40,000 there is cost as well as profit. Now to do the branch account, we must know how much profit is that, so we cannot calculate that profit. So to calculate that profit, we need the percentage. Okay, this percentage is on cost, but we need percentage, the loading percentage on invoice. Here we have cost, they do not match. Here it is at invoice price, here it is at cost, so they do not match. So to match that, what we need to do is we need to convert this percentage from on cost to on invoice price. All right, so how to do that? See, it is very simple. I've already shown you in the previous examples. So here it is, conversion of loading percentage. See, C is always less than invoice price. The cost will be always less than invoice price because invoice price contains profit, right? Simple, and cost is cost. And I always take cost as minus and IP as plus, invoice price as plus, because to arrive at invoice price, we add the profit, and to arrive at cost we deduct the profit. Alright, so in this example here it was given cost plus 25%, right? Cost plus 25%. So we need to convert this into invoice price. So to do that first we need to take 25% on cost, right? See, what we have to do is we'll take 25 by 125. Okay, if it is 35 then we'll take 35 by 135. If it is 40 we'll take 40 by 140, like that. Okay, so here it is 25% on cost. So to go to invoice price we have to add the profit. That's why instead of taking 100 here, 25 by 100, I took 25 by 125. Okay, 25 by 125 into 100. So 25 by 125 into 100 because of the percentage. Okay, so 25 divided by 125 into 100, that is equal to 20%. All right, so we got the percentage on invoice price. So this is how you convert the percentages. Okay, and when do we need to convert the percentages? When the percentage on loading and the goods sent to branch amount doesn't match up. Okay, if both are on cost then you don't need to convert, and if the both are on invoice price then also you don't need to convert. The conversion arises only when they differ. Okay, so when they differ you need to convert the percentages either on cost or invoice price as it is. Okay, it's very easy. So now let's solve the problem. You got the idea, right? How to convert the percentages. Yeah, if it is here 40%, take 40 by 140 into 100. All right, then you will get immediately the invoice price. Okay, and if you want to go from invoice price to cost, then you will deduct the percentage. Like here, let's say here 25% on invoice price is given and you need to go to cost. Then what we need to do, we need to take 25 by 75. Okay, because to arrive at cost we will deduct the loading percentage. All right, okay, now you got this idea, right? Now let's go ahead. See, first in the branch account we always take the opening balance, the opening balance of assets and the opening balance of liabilities. Yeah, but we don't have liabilities, so we will forget about the liabilities. See, I have the assets here, opening balances, stock and debtors, so I will take that to balance B by D. So we have got the opening balances, right? Opening balances of assets are always debited in the branch account. Next we have got, see, now let me tell you one more thing. See, whenever the problem is based on invoice price, all these items, opening stock, closing stock, goods sent to branch and goods returned by branch, all these will come at an invoice price. Okay, in the branch account. So when they are based on invoice price, that means they include cost as well as profit in it. So we have to remove that profit. Okay, otherwise the entire branch account would be a mess. Okay, so the profit wouldn't be a correct profit. The general profit and loss which you find at the end, it will be wrong if we don't remove this unrealized profits. Okay, so we have to remove this unrealized profits. All right, so what I've told you is that opening stock, closing stock and all these 4 items would appear at an invoice price, and from that invoice price we need to remove the profit. Okay, let's see how to do that. See, first I got the opening stock. All right, so in that opening stock there is cost as well as profit in it, and I have to remove that profit. So to remove that profit, what I need to do is I need to make an additional entry here by stock reserve. All right, because I need to create this dummy account to remove this profit. So first I need to calculate how much is the profit, right? So I have got here the loading percentage, 20% on invoice price, which we just found out, right? 25% on cost was given in the question, we converted that into the invoice price. So 20% I've got, so I will calculate 8,000, yeah, 8,000 into 20%. So that percentage you will use everywhere now to calculate the loading. Okay, to calculate how much profit is there in the invoice prices. So it is 1,600. So we will take 1,600. All right, so to remove a debit we have to make an equal credit. All right, now let's move on. See, next we have got here goods sent to branch. See, goods sent to branch, here it is 40,000 and this is at invoice price. So whatever it is at invoice price we directly take it. Okay, the goods sent to branch will always come at a invoice price. Okay, at an invoice price. So to GSTB 40,000. Now in this also there is cost as well as profit in it, so I need to remove that profit. So to remove that profit I have to make an equal credit entry. So by GSTB I will take here. Okay, equal credit entry by GSTB. Now how to calculate that loading? Same, from 40,000 we calculated that loading percentage, right? 40,000 into 20%, that is equal to 8,000. Now how I got 20%? This 20%, okay, we converted that, right? So this percentage is very, very important everywhere. All right, so 8,000. So we'll write that 8,000, and this is the general loading on the goods sent. So we will write just the loading here, all right, in the bracket, so that they can understand, the examiner will understand. Then next we have got the expenses. The expenses are paid by the HO, right? And all the expenses paid by HO will come on the debit side of the branch account as to bank. So we have got the expenses here, 2,100, okay, total. And the next we have here goods returned by branch. Now the goods were sent to the branch at an invoice price, right? So goods will always return by branch at an invoice price, okay? It will return at an invoice price. So the returns by branch is always credited, we all know that, right? By GSTB we take it, right? By goods sent to branch, because it is opposite to the goods sent to branch. So the return is always credited in the branch account. Now I told you that returns are also at an invoice price, okay? The returns are also at an invoice price. Goods returned by branch are always at an invoice price. So we need to remove that cost plus profit. So we need to remove that profit, okay? It is at cost plus profit. So to remove that profit, we have to make an equal debit entry. To remove a credit, we need to make an equal debit. So to GSTB, that is loading on return, okay? This is loading on return. It is very simple. That 20% we will use here, okay? 20%, how much it is? 800 into 20%, that is equal to 160. So 160 would be our loading on return. All right, so that 20% is very, very important, okay? So we'll use that. Next we have got here the sales. Now see, sales, whatever sales the branch makes and whatever cash it receives, it always sends it back to its boss, the head office. So that will come here on the credit side as by bank. All right, the head office is receiving, right? This is the nominal account. Whatever revenue it receives, it is credited over here. So the whatever cash the branch receives from selling the goods, it will remit it back to the head office, okay? So we'll take it over here. First we'll take the cash sales, that is 18,700. The immediately cash is being received by the branch and it is remitted, it is sent back to the head office. So cash is 18,700 cash sales. I will write here cash sales. Then here credit sales. So we will not take credit sales, because in credit sales we don't receive the money at that point, okay? So we will not take the credit sales entirely, but we will take whatever the money received from our debtors, okay, who promised us to pay. So cash receipt from debtors is equal to 28,500. So we will take that, okay? Cash received from debtor. All right, cash received from debtors, and that is equal to 28,500. You got that, right? And it is equal to 47,200. all right, so we took cash sales and cash received from debtors. We will not take the credit sales. All right, then we adjusted these things to the debtors account, right? So we will not take it over here because these are already adjusted. And next what we need to do is, yeah, everything is over, right? The opening balance of assets, and then we remove the loading here of this opening stock, and then the goods sent to branch, and remove the loading of that also over here. And then we have got the return here. The return also, there was loading in it, so we remove that loading here. The expenses also done, yeah. Then yeah, the sales are also done. Then the last thing we need to do is the closing balances. All right, so the closing balance of stock is given. I told you the closing balance or the closing stock also at an invoice price, so we have to remove that profit also, okay? So we will take it over here by balance C by D, the closing balance of the assets, right? So first we will take the stock is how much? 6,000 given in the question, so we'll take that 6,000. So in this also there is cost as well as profit in it, right? So we have to remove that profit. So to remove that profit, what we need to do is make an equal debit entry over here as to stock reserve. For the opening and closing stock, we will use this dummy account, okay? Stock reserve, to stock reserve. Now here we need to calculate how much? 6,000 into 20%, that is equal to 1,200. So 1200 would be the loading. Okay, this will be the loading on closing stock. You can write it in the bracket if you want. It is better to write loading on closing stock. All right. After that there is the debtors closing balance. See, it was not given in the question, but don't worry, we prepared the debtors account and found out the closing balance as 5200, right? So that we will take it 5200. Debtors closing balance is 5200. All right, so now everything is done. Yeah, the closing balance, opening balance, everything is done. We remove the loading over here from the stock because there was profit in it. We remove that profit or loading. Okay, so debtors is also over. Now we will balance this account. After balancing, we will find the profit or loss made by the branch. See, here this side is shorter and the credit side is bigger. Okay, so the credit side totals to 68,800. all right, 68,800. Everything, if you add all these, it amounts to 68,800. I will write that on both the sides, 68,800, and then we will subtract all these items with 68,800. All this sum is 56,660. okay, 56,660. okay, so we will subtract that from 68,800 minus 56,660. okay, so it is equal to 12,140. okay, so 12,140 would be our profit to profit and loss. all right, to profit and loss, it is our profit. Easy, right? How we calculated the profit. So the thing is, you need to remember is these things will appear at invoice price, and in that there will be loading or profit included in them, and you have to remove all that profit. okay, and you need to make the conversion if required. If they don't match up, if the loading percentage and the goods sent to branch amount doesn't match up, then you need to convert the loading. okay, it's very easy, right? It's very simple. okay.